You ever get that feeling that something big just happened in the financial world, but nobody seems to care? Like you're scrolling through your phone, reading the same old stuff, stocks up, stocks down, some new crypto coin with a name that sounds like a Pokemon, and then, boom, one headline quietly drops. It doesn't scream. It doesn't flash. But if you really look at it, there's something hidden in there. I mean, it didn't crash. It didn't soar. It just kind of stayed right on target. And that's what makes it weird. Because when a company hits the exact number analysts were expecting, not a penny more, not a penny less, you'd think that would be good, right? Like, hey, we did it. Bullseye. But then you look a little deeper, and you start to notice not everything is as pretty as it looks on the surface. I'm talking about a company that's in the money game, literally. Its whole business is about lending, investing, helping other businesses grow. The kind of company that thrives when the economy is steady and dies when things shake. So when this kind of company reports its numbers, investors pay close attention. And this time, they definitely noticed, but maybe not in the way the company hoped. You see, the profit came in exactly as predicted. 32 cents per share. Not bad. Not great. Just expected. But then came the twist. Revenue? That's where things got awkward. Because while Wall Street was expecting a bit more, something like $84.57 million, the actual number stopped short. $83.49 million. A small miss, but in finance, a small miss can feel like a red flag. And investors? They didn't freak out, but they weren't thrilled either. The stock ended up at $10.33. Barely moved. Flat over the last 3 months. Down more than 13% in the past year. So yeah, not exactly the comeback story people were hoping for. And here's the part that really hits hard. In the last 90 days, analysts reviewed the company's earnings twice, and both times it was negative. 0 upgrades. Just a quiet nod of meh. But wait, it gets even more confusing. Because despite all this, the company's financial health rating, surprisingly decent. It got a good performance tag on Investing Pro. Like, hey, we're solid. Nothing to see here. So now you've got this odd contradiction. A company that seems okay on paper, but investors are backing away. Analysts aren't impressed. And the revenue didn't deliver. Makes you wonder, what's really going on behind the scenes? Is this just a bump in the road? Or is New Mountain Finance slowly losing steam while nobody's paying attention? Only time will tell. But if there's one thing we've learned from stories like this, when the numbers barely hit and people barely react, that's when it's time to start watching closely.